Russell, so good to see you. I'm glad you're here because I really wanted to talk through current events right now. We are recording here towards the end of April. The
Yeah.
markets have calmed down since the Iran war began. However, oil prices are still high. A lot of parts and pieces in motion. Do you have any predictions when it comes to the market outlook for the rest of the year?
Well, looking at what's happened at the end of March, we were down 5%, right? Now the markets are making new highs. The S&P's up 5,
Right.
6, 7% for the year, depending on how you look at things. Yet the um, Iran war is continuing. There's concerns about inflation we'll talk about. And the Fed isn't cutting rates anymore. So I sort of go back to where we were before the war started. And, I think there's some caution in order. We've had, and particularly for investors planning for the long term, everybody over the last three or so years, the S&P's up more than 70%.
Right.
So you got to be cognizant of making sure that you protect the gains that you've got.
I'm really glad you brought that up because that is my next question. Of course, the markets have rebounded. As you said, we're kind of seeing new highs here. The pessimist in me says, all right, well, we must be at the point of maximum financial risk, right? So are there any particular actions that we should be taking now?
Look, as I talk about all the time on our radio show, in the book I wrote, Wall Street is Not Your Friend, I like most people are in the retirement red zone, 5, 10 years from retirement, folks that are retired to have no more than half their money in the stock market. I think, we certainly have not had a major downturn since 2008, and we are overdue for one. Doesn't mean it's going to happen anytime soon, but you are seeing some bubbly type stuff, let's say, on the
Right. Yes.
AI side.
Yeah.
People have had good gains. So, we like strategies that protect our gains, but also set us up to benefit if the market keeps going up.
And I want to circle back to AI in a second, but first I want to talk through our inflation risk right now. I'm also hearing a lot of chatter that, or at least fears that we could see rates like we saw in 2022 and it was 8%. How do you feel about the inflation risk right now? And what does this mean for investors?
Well, what I'm hearing through sort of the professional investors kind of back channels is that, what's going on as it pertains to the price of oil
Mhm.
and more specifically, sort of the supply chain of oil, petroleum related products. And you realize that uh, oil related products are in so many affect the prices of so many things, including food, fertilizer, things like that, that it is pretty likely we're going to start seeing inflation numbers well into the 3+% range. And even if there were a rapid resolution of the Iran war, they're already talking about, they're already experiencing shortage of petroleum products in some places.
Right.
I think the price of food is going to go up again. And
Yeah.
we've all lived through that. The trip to the grocery store is, as they say, ain't nothing like it used to be, right?
Right. I'm going to buy all my bacon now. That was
Good plan.
that was really hard on my budget. Okay, so I want to talk through one more risk that's being, brought up a lot, and that is concentration risk, and to kind of see what that looks like. This is the S&P. And Russell, I know
Right.
you know all this already, but those squares are related to how big the company is, right? So even though we are invested in the S&P, which is 500 companies, it doesn't mean that we have an equal share of each piece. That being said, Goldman Sachs recently said that AI is 45% of the S&P. Should we be concerned about this concentration risk?
Well, we've been talking about for a couple of years the concentration risk just around technology
Yeah.
overall. I think Goldman, in saying that, is it basically tech is about 45% of the S&P, and I guess all tech is now doing AI one way or
Right.
another. That's probably how they make that connection. But that's as big a percentage that any one sector has ever been of the S&P 500. And, valuations certainly are getting a little nutty in some areas. So, I do think some caution is in order. It is certainly, just like the internet, it is certainly the case that AI is here to stay. It's having a major impact on businesses and consumers.
Right.
There's no question about that. The question is always about valuations, which companies are going to be winners and losers. And so, careful portfolio management and asset allocation are definitely important.
Right. That's certainly an important piece of the puzzle. The other half, right, is if we are feeling uncomfortable with how our portfolio is moving right now, perhaps we need to take a closer look at our risk tolerance. So, Russell, if somebody would like to sit down with you, talk through these headlines, talk through their 10-year, 30-year plan, what's the best way to reach you?
Well, folks can go to our website, Aaron, which is hackmanwealth.com. Again, that's hackmanwealth.com, or give us a call on our 800 number, 866-506-1713.
Great. Russell, thank you.
Thank you.